You are listening to ChartingWealth.com for Thursday, the 5th of November, 2015. We always start when we look at the market with the total market. That's reflected by IYY, which is the symbol for the iShares Dow Jones U.S. Total Market Index Fund, which is an exchange-traded fund that tracks the whole market. We can see we are still in a major up move ever since the market crossed over on our MACD and the signal line back on the 5th of October on our two-day charts, and has continued to rocket upwards. Now we see on our two-day chart today we still have an open candle, an open green up-moving candle with the kind of Japanese candlesticks that we use. Derivative oscillator looks like it lost a little bit of steam. Our MACD and signal line are still about as far apart as they have been for the last many days. Now, when we revert over to our shorter chart, check out our 4-hour chart, we can see that there was up movement in the morning and then down movement in the afternoon. Technically, the total market was down 0.28%. There was a crossover going down. We've sort of been up and down, up and down, up and down over the last couple of weeks or so, as we've seen the market sort of jigger around, moving up and then burning off, moving up, burning off, moving up. Don't know if this is going to signal a big down move or not. We just have one down red candle. We do have a wick at the bottom showing the movement. But again, our derivative oscillators lost a lot of speed. We crossed over going down on the short chart, still well above our blue line, which is our two-day trend line. So we still have a ways to go before we start seeing any definite turning around yet. But cautious, always watch that. Now, we're going to go to SPY. What is that? Well, that is the Standard & Poor's 500, another exchange-traded fund. Looks very similar to IYY because the S&P 500 are 500 big companies that reflect a lot of volume in the total market. And we can see that it's moved up very similar to the total market. When we back out and look at the day itself in two snatches, we see that there's a red box as far as the movement in the morning and down movement in the afternoon with a crossover similar to the total market. Derivative oscillators lost its speed. We notice that we're still well above the two-day trend line. So again, some caution. We saw same kind of moves happen over the 26th and 27th, and the market caught its feet again. So we'll just watch and be careful. Technically, market was down, the S&P 500 was down 0.30% for the day. Now let's look at the two-day chart for the Qs. What is that? That is the Qs, the cubes. QQQ is the symbol. What is it? It's the NASDAQ 100. And let's redraw our trend line, sort of see where we are. We are continuing to have up moves. We see the derivative oscillator might have lost a little bit of energy. Looks like our MACD and signal line are still about as far apart as they had been over the last two-day candle. We still have green box moving up. If we step back to the 4-hour chart and check that out, we can see that technically the Qs was up 0.02% for the day. But we do have some signals. Again, we don't use just straight candlesticks. We use the Heikin Ashi. And again, ask you to read about that. That's HEIKEN-ASHI. It is a different way to actually record the price movements, and I like it because it can give us some real forewarning. We have a red open box where we still saw upward movement, and then in the afternoon, we've got what I would call a spinning top, which we've got a movement up and movement down, very little movement throughout the course of the candle, and it's almost a doji, whereas it just basically looks exactly like a cross. This is more like a spinning top, almost a doji. What does it mean? Lots of indecision, so continue to pay attention to that. If you notice, the Qs, as we talked about this yesterday, has never moved back above. It actually continued once it crossed over on the 30th of October. It has continued to have some upward movement, but we've had a divergence here. The MACD has not gone any higher. In fact, it's continued to stay below the signal line, and meaning that that move was not sustainable typically by the kind of math that's done to figure out the moving average convergence divergence. What does that mean? Well, when you don't see the blue signal line cross the blue line, the MACD itself cross over the red signal line, even though the price is still going up, there's not a lot of support there for that price movement as we have seen. So we are still above the 2-day trend line, but we do have lots of indecision in the Qs, even though it was up for the day, technically up 0.02%. So 0.02%. Not a lot of up movement, but continue to watch that. Again, remembering that on all three of our indexes, the total market, we're still in a up movement on the big 2-day chart above the 2-day trend line. Lots of space still between the MACD and the signal line. Same thing in the SPY, the Standard & Poor 500. Same thing in the Qs. So could just be a breather. Market could just be digesting. So pay attention. Continue to watch. Now we're going to go to gold. We see that gold continues to spike down. We've got an even bigger acceleration in the derivative oscillator, crossed over on the big 2-day chart back on the second. That's that 2-day candle on the second, although it had already been going down since the 19th of October. So let's look at the chart, though, that we really pay attention to. You all know that's the 4-hour chart. It has been a great chart for shorting gold. What do we see? Gold rolled over on the 19th of October and has continued. It moved up a little bit on the 28th. It had a bump up, not a little move, but a bump up, and then it rolled back over. Never crossed on our MACD to tell us to get out, and then it rolled back over and has continued to move down, still well below the 2-day trend line. Lots of downward movement. Does look like the derivative oscillator sort of peaked around the 3rd, but has continued to move down. And for the day, the gold was down almost 8%, 0.93%. So hopefully those of you who were in gold got out of gold, and if you were into using a reverse index, that is something that moves in the opposite of gold. Maybe you did that and you're watching your virtual trades score major points. When we say short, we're talking about that is going in opposition of the price of a commodity or a stock equity of some kind. So again, we don't talk about buying and selling real stocks, real bonds, real gold. We talk about virtual trades. And again, we would love you to go online to chartingwealth.com, take the courses that we have on there, listen, it's all free. Start learning how to actually read a stock chart and how to do virtual trades. And then once you feel good, it's your decision to do whatever you want at that point. But we want you to listen every day, learn about all this. If you don't have the layout that we use at Free Stock Charts, all you got to do is email us. Same thing if you want our 15-minute how to read a stock chart video. All you have to do is email us that email address, CW as in Charting Wealth, so CW@chartingwealth.com. And chartingwealth.com is also our website. Please follow us on Facebook and Twitter. Let us hear from you. Feel free to post comments. We're also on YouTube and we're also on Instagram. Thanks so much for listening. Hope the market's treating you well from chartingwealth.com.